Michael, welcome back to Face. How are you?
Yeah, I'm doing really well. Thanks for having me. How's your weekend?
Hot. How about you?
Yeah, I think that's the narrative across the world right now, right?
Isn't it? Yeah. So, hell on earth. What are you doing? What's top of mind? I know, Michael, that you are you going to share your screen at all
Yeah,
here
happy
on this?
to at some point here.
Okay. All right. I went through your stream and on Twitter,
Mhm.
and it seems like you spend a lot of time mentoring people. And one of the things I really liked, and I've talked about it, maybe you could elaborate on it, is to have a two-way relationship with your broker, which means pulling equity out of your trading account to make it real. And that once you started doing that, you took your trading even more seriously because they're not just chips like you would get in the old days in Vegas, where it didn't seem like money or just throwing a chip on the table.
Yeah, I think that's totally spot on. Like kind of making that relationship more real or understanding that, hey, this can actually be a consistent source of cash for me changes how you kind of view the market, right? If all of a sudden now it's more, how can I make sure that I'm consistently getting paid? How can I make sure that this gravy train doesn't stop? Versus how can I make sure I have the biggest number in my brokerage statement? So I think once you kind of consistently reinforce that relationship, all of a sudden you almost understand the consequences of those decisions that you're making when you are trading and being a little bit more cautious, a little bit more patient, a little bit more focused on that sort of risk management side of things only can have positive outcomes for your trading in the long term.
How about taking it one step further and buying something with the cash that you withdrew, so you actually have something physical that you see that came from my trading
Yeah, so
rather
I
than
like
just, what do you think?
I like to reward myself in a slightly different way. So obviously financial rewards are fantastic, but I think rewarding sometimes a P&L outcome can be a little bit of a way to kind of like chase the dragon, to sort of speak. So I like to reward myself based kind of like on following my rules. So say, for example, if one of my rules for myself is that I want to lose no more than 1% of my account after stop loss, if 90% of my trades that week lost less than that 1%, then I would say that I objectively followed my rules for that context, and I want to reward that decision instead of the P&L. So if that then
Oh,
happens,
interesting.
that
Okay.
becomes when I, buy myself that nice bottle of wine on a Friday, or I, have that
Okay.
nice dinner, or for me, my addiction is running shoes. So that
All
tends to
right.
be how I kind of, reward myself there. And I'm trying to reward myself for obsessing over the process because I found that when that becomes more bulletproof, then the outcome sort of takes care of itself.
Okay. Very insightful, Michael. And let's get to some insight on Amazon. So, Amazon had its Prime Day, actually gapped up. I think that green candle, you're looking at weekly, but
Yeah.
daily,
Yeah.
we had a gap. And then we had um, last week, pretty negative week across the board, especially in Megacap. So are you turning a little more negative here in
I,
Amazon?
I think in general, there's a few names that have had a significant amount of selling pressure as we're kind of creeping up towards that special rebalancing. So today after market close, the QQQ index is changing the market weighting of sort of the top 5 names. So it no longer has a 45 or 46%, I think, market index weighting. And so that's now getting changed down to sort of a 38% max weighting. So that's why we're seeing a lot of this sort of high volume selling pressure in the Amazons, in the Nvidias, and even some of the Microsofts, as basically a lot of that pressure is now getting priced in as that sort of change is going to happen. I know a lot of the time, or what you talked about here this morning, was sort of that convergence of data, right? How we have tons of earnings, we have FOMC, and sort of now
Yeah.
to throw this into the balance, it kind of does make it seem like the path of least resistance is lower, not necessarily higher. And so a natural pullback here seems to be where it is. And it, on these mega cap names, on these leading names where we've seen a ton of kind of sustained kind of climbs higher, we're now starting to see really aggressive volume step into the downside, which makes me think that, hey, it's really challenging for me to want to force price action here or to chase these moves higher. I don't think the risk reward is there in the short term for us to get that immediate follow through.
Okay, so in situations like this, with all this data, are you a stand aside guy or just scalp intraday? What do you do on a week like this with economic indicators, three central banks, and big earnings reports? Do you just become a spectator?
To a certain extent, yeah. Like my big belief here, right, is we've got too many data catalysts out there for me to think that I can front run a trend without essentially gambling on that decision.
Yeah.
So my objective here is to more wait for that trend to be established and then to find pullbacks or relative pullbacks right within that context to sort of take advantage of. This week, there are some opportunities for me to take advantage of some trades, especially early in the week pre-FOMC, but I'm going to be putting more of my focus towards names that don't necessarily have as much headline pressure. So stuff like AMD and NVIDIA are going to be a little bit closer towards sort of the upper end of my watch list versus taking advantage of maybe like a Microsoft or a Meta that reports tomorrow and Wednesday.
All right,
So
let's go back to AMD.
yeah,
Okay. So AMD, one of the few semiconductors with a very strong sector that put in a failing rally back at that support level. That to me looks ugly. And
yeah.
to me, just a matter not of if, but when we break down. That actually measures under 90 to me, about 85, which is a huge move. What do you think of this setup technically?
I think you've got a spot on repetition pattern here, right? So it's almost like you had a channel breakdown and then you can have
Yeah,
it basically take the stairs down here, right? I think
yeah.
that 90 target would probably be
Okay.
my initial area, maybe even a stop along the way at 100,
That's still
depending.
20%.
Yeah, exactly. That's a huge pullback. So,
Yeah,
and it would be relatively healthy considering the move it's had, right? Like in October, you could buy AMD at $60, right? Or in that
yeah,
$60 range. So the
yeah.
fact that it's up, almost 100% in 9 months or something along those lines, 20% pullback here is beyond healthy.
Okay. Any other asset classes you pay attention to besides
Honestly,
equities?
mostly I just focus in the stock world. That's what I've been trading for
Okay.
10 years now. So it's hard for me to want to learn something else, to be
Do you
honest.
want besides the mega cap, are you watching things like banks or miners or any other sectors that are coming to the forefront of that there might be opportunities with all this data and central
Um,
bank activity?
Honestly, not particularly. So for myself as a trader, I'm a big believer, at least for myself, my success has come from kind of almost having like that tunnel focus. So I'm really kind of zoned in on sort of my 8 names that I trade on a day in, day out basis. And I'm looking for the best version of a setup that I can get in all of those sort of securities. And I'm not looking necessarily to bounce around
Okay.
too much between different different sort of monthly theses.
I agree with that. Sometimes you look at too much, you lose your focus. How do you trade this stuff? You just either get long, do you short these issues? How do you
Yes.
participate?
So I'm right now when VIX is sub 20, I've had very few reasons to want to be bearish. So I've mostly been looking for dip buy opportunities and kind of price action that supports sort of bullish trending price action. So I've been looking to basically
Yeah.
ride that wave as much as possible. In the last 2 or 3 weeks, it has felt a little bit like we've had a shift in market dynamics where the biggest sort of change to me or the most sort of obvious structural change to me was that Fridays went from being sort of a kind of trend day or kind of like a low volume runner day to now kind of becoming a high volume sell-off day. And so I'm a big believer that strength comes in early and it shows up late. And when we see that kind of end of week, kind of high intensity selling, it does seem to be a little bit of a dynamic shift, especially when we've had such a contradiction compared to what it was previously. So that's made me a little bit more flexible on looking for trades to the downside. And then I'm essentially looking for overreaction moves. So
Okay, so you had NVIDIA and Microsoft up there. Um, what levels are you looking for in NVIDIA? I think it's an important high here, but you're looking to buy a break, I understand. Oh, that little triangle breakout line,
yeah.
maybe, huh?
So I was playing this breakout higher here. And then that Friday, the 14th candle, right? We hadn't really done anything to now tell me that bulls are in control since then. So played a volume divergence reversal basically off of that 475 last week and then looked to try to fill that gap. Didn't quite get all the way there, but that was essentially the thesis. So we established trending price action there on that Friday, like we mentioned, and then, find weak sellers or weak buyers, right? Kind of reject inside there and then look to run that move lower. Rest of the week here, my bias is to look for sort of high volume rejections inside Friday's candle again, and to kind of see if I can finish filling that gap. And then once that gap fills, you either look for a retest of that trend line for opportunities to go long, or look for this to kind of consolidate for a little bit while it kind of catches its breath after making that move.
Okay, a pretty crowded trade when you think, I mean, it's really the poster child for the AI explosion, right?
Yeah, absolutely. But that does mean that you just have to make sure that you're actually getting the volume that you're looking for to confirm your thesis, right? If a trade is crowded, then your strength should be pretty obvious to see. And so if you're not seeing like a volume standard that's bigger than what you saw on Friday, or you're not getting a volume standard that's actually convincing that there's strength, then the question to ask yourself is, where is everybody? And maybe this is one to watch versus one to trade. But as long as that volume shelf is there, then I've got no reason to avoid this.
Okay, it looks like it was making after that first huge gap, volume decreased until we had this sell-off here. Do you think that there's potential? What would turn you negative, NVIDIA, and open up your mind to a possible gap fill on this?
Well, I think right now the path of least resistance seems to be towards maybe that 400 zone again, right? And then if it can sort of reestablish some support off of that psychological level, it totally would be reasonable to look for opportunities. I think from a macro perspective, the names that, maybe blew up the most, and if we start to see a bit of a market turn, this is going to be the name that falls the fastest, I would imagine, right? When we see these kind of bumps, when you saw like weed stocks get legal or gambling stocks get legal, you always kind of have that initial mania that pushes price action higher. And then we get a pretty significant pull down that sort of reestablishes a realistic expectation, or once kind of those news narratives get priced in. So I don't think we've had that happen yet on NVIDIA. And the risk reward, at these all-time highs, probably an easier path lower than it is higher. Like it seems like most of the move has probably already happened at this point if you're going to be trying to price in that optimism.
Okay, let's move to Microsoft. They have earnings this week. How would you play earnings on Microsoft?
Yeah, so for me, this continues to look like it's basically just hanging out. We can call this like a channel here, right? So inside middle of this channel, I'm not really being told there's a very strong indication of either direction. And then if I do get a kind of good earnings catalyst, I'd be looking for a trend line breakdown. I think the path of least resistance would be under this like 327 area, right? We've got a bunch of support here of this basically being zone where we've seen dip buyers step in before. So if I can now invalidate that price action, lose that level on some volume, that would give me a lot of confidence that I could kind of start targeting the next points of contact on this trend line. So maybe that 305, that 300, and then like that 290 zone would be sort of a nice move. I think higher, right? Generally chasing breakouts from like broadening formations, they never feel like they're the strongest moves for me. So yeah. I think the path of least resistance continues to be maybe potentially a little bit lower here. And there's a lot of opportunities for basically bulls to step in at each point of contact. And so I'd want to just basically ride it down towards that path.
Okay, got it. Anything else you want to cover stock-wise?
Honestly, I think this week, there's so much data that's coming out that the updates, right, or what you're going to know what the trend is going to happen on Wednesday afternoon and Thursday morning. That's going to be sort of the potential catalyst for this next move. And until then, for me, it's going to be more about managing my risk, managing my expectations, and trying to put myself in situations where I'm just not shooting myself in the foot. When I can just focus on the variables that I can control, then everything else will kind of take care of itself. And it's really, I don't want to say egotistical, but a little bit aggressive for me to think that I can front run this trend or that I know better when there's so much information that can invalidate my ideas. And it doesn't really seem like this is a market that's rewarding sort of that rush decision making. So there'll be a time to press and there'll be a time to kind of let off the gas. And I think Monday, Tuesday, Wednesday is going to be a little bit of a time to let off the gas a bit.
Okay. One of our attendees, Martin, is asking if you have a view on Alphabet.
Yeah, on Google. Yeah, absolutely. So we can bring that up here. Again, right, earnings this week, tomorrow. So with all these big moves kind of happening already, or a big kind of climb since even the last earnings, the risk reward doesn't seem like the next move is necessarily towards that 150 or 140 area. So I think you need a pretty impressive catalyst, a pretty impressive earnings breakout to actually think that you have a lot of room higher. I think the most realistic, I still think the most realistic path is lower on most of these names. And that's going to be sort of, I think, how things start to get priced in. So my expectation would be look for a pullback back down towards like the 100 area for a sort of a reentry to go long, or maybe even that 110 zone. That could be sort of your risk reward buffer for a move back up towards sort of 130.
Okay. Do you differentiate if you go back in time a little bit to, like you were showing before on this, just take it back to the highs in 2021? Okay. All right. So that stocks with, a lot of stocks, Apple's made new highs, Microsoft's made new highs. What's interesting about Google is it looks like just a retrace move. And the same was with AMD, that they weren't making new highs, but just retraced the decline of 2022. Do you look at that as being a bearish factor when the rest of the market, many issues have made new all-time highs?
Yeah, I think in general, the lack of market breadth has been a little bit of a concerning point of this rally. And
Well, they're saying
so,
it's broadening out though, right?
yeah, certainly, but maybe a little bit too late for that to happen, right? If we're now going to be
Rotation isn't necessarily bullish, is it, Michael?
exactly right, it can be a little bit of a distraction sometimes.
Yeah.
What I think we have seen to a certain extent is that maybe 5 or 6 names have kind of behaved like safe havens inside the equity space.
Yeah,
right?
isn't that something? Apple's a bond now.
Exactly. And it's been markets have not behaved the same way that you'd expect in an interest rate rising environment, right? And although we've had some inflation certainly should make stocks, kind of rise in price. We haven't seen that necessarily be a very equal calculation across the board. And so as some of those safe havens now maybe start to see some withdrawals, I would be skeptical to think that a lot of these names that are now making sort of weaker, higher highs are going to consistently give me a pretty impressive kind of next leg higher. So again, I'm really struggling right now to see how the risk reward on these moves is, to start making new all-time highs on these Googles or to make new all-time highs on an Amazon. It doesn't necessarily feel like that's the easiest path forward to me. And so I just want to be a little bit cautious until I get some new information that maybe either creates more optimism or confirms my, I'm going to say, bias to be skeptical.
Anywhere, just a classic lesson is sell relative weakness. And any stocks that after this, I was not looking for 4,600 a couple of months ago. 4,340 was kind of a target I was looking for in S&Ps. But all these stocks that have performed normally, okay, not abnormally, but just corrected their 2022 weakness, are your best short candidates. Even though there's more air left in things like Nvidia and maybe Apple. Apple's made a new all-time high. So yeah, it's interesting bifurcated or trifurcated or quad market. But it does look like, and I don't know if it's, do you think it could just be the rebalancing, Michael, that's putting pressure on these stocks? It almost seems too easy.
It's definitely going to be forcing so much volume out there, right? The amount of funds that track the indexes on a dollar for dollar basis or near dollar for dollar basis is incredible. So just from a pure like operational perspective, it's so obvious, but the volume is too. So you can almost not ignore it. Sometimes the most obvious answer is the simplest one, but I think in general, this week we've got 3 things, we'll call it essentially, right, all in one. So it's impossible, I think, to put 100% credit to just one element. I think there's the expectation that the Fed's going to hike again, the expectation that maybe earnings aren't going to be as hot or they haven't been as impressive like we wanted to see here so far. And then this extra selling pressure, it could almost be like the straw that kind of breaks the camel's back.
So again, Michael, what's your business model? Do you have chat rooms? You teach, you mentor? If you want to show your website now, it'd be a good time.
Yeah.
So go ahead.
Best way to contact me is through Twitter or my email, michael@dtrtrading.com. What I do is I work with 5 or 6 traders at a time and basically help them level up their trading in a very kind of intense one-on-one coaching capacity. So we'll be go over your trading on a daily basis. We'll be talking about individual pain points that you can fix. And my objective is to help traders get funded with the prop model so that they can then scale that proof of concept. So if that's something you're interested in doing, regardless of what asset class you trade, pretty confident with my institutional experience that can sort of help you get there. And it's really just about focusing on systemizing your trading so that, P&L growth and account growth is a formula, not a feeling. And then that becomes a more sort of sustainable path of trading when you kind of, have that formula in your back pocket.
Okay, well, there are many different prop trading opportunities for people. Have you taken a look at ours?
Yeah, absolutely. You guys offer a pretty fantastic product, but not the same coverage of the names that I trade on a day-to-day basis. So unfortunately went a different path.
Okay, so you actually work for a prop firm and you trade people for them.
Yeah, I do. Correct.
Okay. All right. Well, you never know. So you're saying it's because of the instruments, because they're more stock centered, because I do believe people could trade equities in our program.
Oh, very interesting.
CFDs.
Yeah, that might be very interesting.
They could trade everything.
Yeah.
And I think we have one of the better programs that do not put time pressure on people to accomplish it in a certain period of time.
I mean, I think the most important, like, time has got nothing to do with your ability to find an A+ setup. The market does not care how long it's been.
So then why do these prop companies put time limits on? Because they know it's going to create emotional responses to try and get it done in time instead of letting the market come to you.
Yeah, I think there's two different, we'll call it business models out there, right? Like yourselves, where you're kind of more trader centric focused, where it's about how can you set up our structures or our systems so that traders are actually, rewarded for their decision making process, right? That means no time limits. That means reasonable kind of drawdowns. And then there's going to be other kind of prop firms that just make their money off their evaluation fees. So my objective obviously is not to work with those sort of companies. I only work with companies much like yourself that have that sort of very generous sort of daily drawdown or sort of drawdown ability, and then no time limits either, and simply just one stage evaluations, because there's no point to overcomplicate things. You just got to prove that you can manage risk, and then easy to go from there.
So there you go. You heard it from Michael's mouth. There are a lot of scams out there. I call them scams.
100%.
When it's very slanted towards the house and not towards you. And you heard it from a guy who does it full time.
There's many
program here.
There's many rooms, right, or many prop firms where the average payout is 1%, right? And so 1% of traders get paid out, and you're charging $250, whatever, for an evaluation. You have a casino that cannot lose, and those business models are very predatory towards traders. So just be careful. Make sure that you pick the service that's best for you.
Okay, Michael. So you can follow Michael at DTR_trading.
Yeah, correct.
If you just go DTR trading, you won't get them. So DTR_trading. Thank you, Michael, for being here and for your view on what we do here at ForexAnalytix to give people a chance to accomplish and possibly have a trading career. Appreciate it, buddy.
Appreciate it. I'll look into your program. Sounds fantastic.
All right. Thank you, my trading warrior brother.
All right. Talk soon.
All right. Okay, everyone. That's a wrap for me. Join the team in 17 minutes on the Morning Edge. And I'll see you guys tomorrow for Turnaround Tuesday. People are thanking you, Michael. I'll get a hold of you on Twitter and we'll talk about getting back together in the fall. So remember, everyone, don't just count your pips, count your blessings. See everyone tomorrow.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.